Large cap healthcare, how you doing? Johnson & Johnson, Merck, AstraZeneca. What about Novo Nordisk?
You want it? I'll throw it in.
I mean, man, I could throw it in. My charts are better than yours. Hey guys, JC Peretz here, founder of AllStarCharts.com. Welcome back to Pardon the Price Action, PTPA. I am JC Peretz. I'm here with Steven Straza. Straza, let's get right into it. Bank stocks are continuing to show weakness. Is Jamie Dimon correct that there's more pain ahead for this sector?
I couldn't agree more with Jamie Dimon. I love it when he comes out and says things. I think this was his letter to shareholders that came out earlier this week. He is sounding very cautious, and maybe he's just looking at the charts, JC, right? Maybe he's just looking at this chart right here of regional banks. This is ugly, right? This began about a month ago now with Silicon Valley Bank. We had the initial flush lower. I brought along some to show, if you go to like PNC here, this is what we're seeing in bank stocks right now. We had the leg down coming off, the March blowups, and then we've just been coiling. These are continuation patterns. Continuation patterns tend to continue in the direction of the underlying trend. That's undeniably lower for all bank stocks across all time frames. I think more selling pressure is to come. Bank stocks keep heading lower.
You could see the community banks already breaking down, making lower lows. I would point to financials as a sector, sort of take a step back. Obviously there's a lot of noise, short-term downtrends on a lot of these bank stocks. But when you zoom out, you look bigger picture at financials in general, man, they are at a very critical level. We're right at the 2007 highs, literally the highs in financials before the great financial crisis. This has to go down as one of the most important price levels in American history, and we're right back to those levels. Nothing good happens in financials, and in my opinion, the overall market, if the XLF is below those 2007 highs. And I'll throw one more real quick. The Russell 2000 small caps, same exact scenario, pushing down against those summer lows from last year. If financials and small caps are below last summer's lows, I think the path of least resistance for financials is certainly lower, but I think for the overall market, I think it means that it's under pressure.
Healthcare stocks have been very strong recently. We had some news out of Johnson & Johnson today. The stock is ripping. You like J&J here? What other names you like?
Sector rotation is the lifeblood of a bull market, Mr. Straza. That's how I learned it. And healthcare has been a laggard. And what happens in bull markets? The laggards tend to catch up to the leaders. So the fact that now all of a sudden we're seeing a bid in healthcare names, particularly out of large caps, is characteristic of a bull market. That makes a lot of sense. But forget bull market, bear market. The fact of the matter is there's strength in healthcare. I like it. If we're above the pre-COVID highs in Johnson & Johnson, call it 157, 158. I like that from the long side. Look at Merck. Merck continues to work. This is a trade that's very near and dear to our heart because we love a big base. And find me a better base than Merck. That broke out already. It continues to rip higher. You can see here short term that it's acting well. And let me point you around the world. AstraZeneca, names like Novo Nordisk out of Denmark. These healthcare names continue to act well. So even in markets where stocks in general are under pressure, there's bright spots in healthcare. And it looks like that's going to continue. That's the bet that I'm making.
Yeah, and I would just make a point here that it's not the biotechs, it's not the smaller cap healthcare names. The strength is really concentrated in the large and the mega cap names. Like you just pointed out, a lot of these large and mega cap healthcare names are overseas, whether it's AstraZeneca, Novo Nordisk, there's a bunch of them. So you want to stick with the big caps here. It's the same playbook as tech, right? Go with the big names, they're what's working.
No doubt. Legacy tech. Value tech is hot, Straza. Is it finally time for value tech to have its moment in the sun?
I think it's been time, right? Like we can group the Apples and the Microsofts in with the old school names, right? So I brought along a couple fun ones here. Look at Oracle, fresh 52-week highs. It's been a while since we could say that. It's just not something we say very often.
Yeah.
Let's go. Same thing. I like these bases. I was talking on a video the other day and I was saying, the growth stocks or the tech stocks that you want to be buying are the ones with really nice bases, right? Well, look at this Cisco. And one more I would say is Intel, right? The base in Intel also, building that base out back above the pivot highs. These are now viable options to express a bullish thesis in tech. So go legacy tech stocks.
I got to tell you, in January when we saw that ripper in technology and pretty growth in general and tech in general, I was under the impression that this was going to be a mean reversion. And clearly we're in a reversion beyond the mean, not just to the mean. And this is part of that story. The resiliency in technology. I think the falling interest rates certainly plays a role there. But I am very, very impressed by the strength in technology as a group. The resiliency in tech, despite volatility in some other areas, I think is very, very impressive. This is just one of those examples. No, what's your favorite one of all the legacy tech, the old school tech? Don't tell me Apple or Microsoft, like the really gross old ones.
I like this Oracle. I would never say Intel. I'll go with Oracle. Europe has been red hot this year. Once again, we are seeing these European indexes lead global equities with fresh highs. Are you a buyer?
I think there's places in Europe that you want to be, no doubt about it. Look at the Euro Stoxx 50 making new 52-week highs. Europe is making new 52-week highs. Straza, I was promised a crisis. People are like, well, JC, the S&P 500 is in a sideways range. Yeah, it is. The United States is an underperformer. By the way, stocks traded before 2011. There were other bull markets throughout history for a long, long time where the United States was an underperformer. That's perfectly normal. Just because we haven't seen that in a long time doesn't mean that it didn't happen before. We just talked about Novo Nordisk. We just talked about AstraZeneca. There are industrial stocks. There are material stocks, chemical stocks, like Lind, for example, is UK-based, formerly German. Apparently, they have a lot of American employees, whatever. It doesn't matter. These are companies that are foreign out of Europe. So we're seeing sort of a shift in relative strength coming out of Europe over the United States, which I think is very constructive, coming out of a group that did nothing for 20 years. You look at France, UK, you look at a lot of indexes throughout Europe. It's been dead money for multiple decades. So it makes sense that it's their turn. Sure.
What stands out to me here is if you look at the overlay chart, you might think to yourself, okay, S&P 500 has some catching up to do to international equities. Maybe international stretched, right? And they close that gap a little bit. Maybe in the near term. But if you go to the ratio chart next, this thing is just getting started. This is a massive, massive trend reversal, like you alluded to, waiting over 10 years for this, right? So I think international stocks entering a brand new regime where maybe they lead for years and years to come.
Straza, with the dollar continuing to decline, which emerging market currencies should we have our eye on?
The answer is really all of them, I think. This chart right here shows it well, really coming off of a really low base here. This is showing us the percentage of emerging market currencies that are above their 50-day average. So basically, the majority of EM currencies are now trending higher over an intermediate term, right? One that stands out to me would be the Mexican peso. We had this big distribution pattern that just broke down late last year, got some follow through, hit our first target. I think this trend continues in favor of the peso. But what it really speaks to more broadly is risk on action, in my opinion, right? The dollar is no longer just showing a relentless bid. In fact, emerging market currencies, the riskiest currencies in the world, are now outperforming it. So big change from last year.
The correlation between equities and emerging market currencies is off the charts. I mean, it comes back to the dollar. When you see a stronger dollar over the last, 6, 7, 8 years, the stronger dollar coincides with stocks under pressure, right? Stock market has loved a weaker dollar. So when you're seeing that strength in emerging market currencies, and I mean, just by the way, resilient strength in emerging market currencies pushing up against new 6, 7, 8 month highs, very impressive. I'll go back to the Mexican peso and the correlation that the dollar peso has with the volatility index. When dollar peso is doing well, volatility tends to be elevated as well. When dollar peso is declining and Mexican peso's doing well, that comes with lower volatility, which is exactly what we've seen. We've seen all this bond market volatility, but we haven't seen it in the stock market. And the strength in the peso, I think, speaks to that for sure.
Okay, so this is a game that we like to play where I will throw out a word or a phrase. You will tell me the first thought that comes to mind. Systemic.
Systemic. Global is how I look at it, because if you talk about systemic risk, we talk about the global macro implications. Bitcoin and cryptocurrencies do not have any systemic risk. All of these things can go to zero tomorrow and nobody who matters will care, right? What is it? A trillion in assets or something like that? That's nothing. The bond market is 120 trillion in assets. When you see something happen in the bond market, that's when you know it's systemic. So, it's a word that I know you don't love. You're like, what even is systemic? Systemic is, are we seeing broad implications to price moves? For example, the banks. What are we seeing in banks? We're seeing banks disappearing, governments getting involved, panic, this and that. It has yet to proven systemic. It might be systemic. It might be like the cockroach sort of situation where there's not just one, and we do see systemic implications in this quote unquote bank crisis. But as of right now, Wednesday afternoon, April the 5th, we have yet to see those systemic implications play out. They might, but we haven't seen it yet. You haven't seen volatility in the stock market. You haven't seen volatility in the Forex markets. You saw it in the bond market. You saw it in banks, and that's it. Is it systemic?
I think we should retire the word after hearing it be misused so much over the past month. What it means anymore. The only thing I'll say, right, because everybody's going back and forth and arguing about whether or not all of these bank failures are representing systemic risk out there in the banking system. What is systemic, that I know for a fact is systemic, is that interest rates rose at the fastest pace of all time, okay? And all banks that are in the lending business now have to deal with that and manage their balance sheets appropriately. Systemic issue that all banks are having right now. Whether or not it creates some sort of a systemic crisis, I don't know. We'll see.
So if it's systemic just in the banking sector, then by definition, it is not systemic.
Has anything ever been systemic only in the banking sector?
Touche. Fair point. I guess we'll see how it plays out. Which goes back to our earlier point about financials. All right, Straz, a 2-minute drill, bonds and rates. Let's take a look at the yield curve. What is it saying right now?
So short rates are coming in a little bit. This is a chart of 5-year real rates showing them making new lows. I think you're probably going to see the 5 and the 10-year follow on nominal basis. If you go back to the first chart, though, last week we talked about these bases in the bond ETFs and treasury notes themselves, right? These bases are resolving higher, it looks like today. And at the very same time, if we look at yields, whether it's the 5-year or the 10-year, they're testing some very key levels. We are constantly talking about the 2018 highs across all asset classes, right? 2018 highs were there. 5-year, 10-year. If those levels don't hold, I think you do see further downside in yields. And how much momentum comes with that downside is what really matters, right? Because if they just start, slowly grinding lower, that's probably okay. And in fact, a lot of risk assets probably do really well in that environment. But if these things collapse lower from this key level, you're going to see some more bond market volatility. That's probably going to affect other asset classes.
Yeah, I would agree. Stock market hates, when rates are moving very fast in either direction, right? Because there are systemic implications to $120 trillion asset class. So the fact that 5-year yields, 10-year, see what I did there? 5-year yields, 10-year yields, they've done nothing for 6 months. How have stocks done over the last 6 months? They've done fantastic. The S&P 500 was up 7% in the fourth quarter last year, another 7% in the first quarter this year. These are astronomical returns. I think it goes understated because people are junkies these days and don't realize that a 7% quarter is a monster number, particularly back-to-back quarters. Not to mention Europe was up 25% in the fourth quarter, another 16% in the first quarter. So yes, stocks are doing very well in an environment where yields, they've come down, but it's been orderly. It's kind of just been in a range. And if they stay in that range, I think risk assets continue to do well. If rates break down, they really start accelerating to the downside, there's probably a good reason why they're doing that. Financial stocks are probably falling with them, and we're seeing some more systemic implications to the interest rate market, in my opinion. So definitely worth watching, whether you trade bonds or not.
That would be economy recession stuff, right? If we really start seeing rates plunge here, then you're going to hear all that and all those worries come back.
All right, Straz, a hot take. What do you got this week?
First of all, I just want to say, go UConn Huskies. So that's now 5 national championships in 25 years. For the last 3, we've won them with 3 different coaches. So you can't say enough about just the strength of this program. UConn is one of the true blue bloods of college basketball. Heard it here.
Yeah, nice that the men mix one in. It's not just the women that are dominating up there, right, Strauss?
Look, they're so good. They're both.
No, I know. Good for UConn. They deserved it. They beat my Hurricanes and they earned it. So God bless them. My hot take is that it's go time for precious metals, Straza. I know how much you love it when JC's bullish of gold. We just hit the highest quarterly close in gold in world history, in human history, going back to the dinosaurs. Gold prices have never finished a quarter this high ever in history. So, do we really get going now in the next couple of weeks, couple of months? Does it happen later this year? I don't know for sure, but I think that we are in the early stages of something serious for precious metals. I've gone out of my way. I just did a private placement in a penny stock gold miner out of Vancouver. I mean, I have my exposure. I'm in. I'm looking to add to that exposure. If gold is able to stick these highs, I want to be adding to gold. I have enough where it matters to me, but I can get more irresponsibly long if the price action dictates. And I think that's exactly what I'm going to be doing later next year, right? How do you feel about that?
It looks good. I mean, I still want to see that breakout, but I do think it's coming. I mean, they've been some of the strongest groups over the near term.
And silver's outperforming lately too, which is characteristic of strong markets for precious metals. Ladies and gentlemen, thank you so much for watching. Make sure to give us a like and hit the subscribe button so you never miss an update. And follow me at All Star Charts, and make sure to follow Steve at Straza on Twitter. Leave a comment below. Let us know what you think, and we will see you next week.